everyone, welcome to the next installment of my market update. This is going to be my August market update. I'm Isaiah Rial, financial advisor with Laguna Wealth Advisors. Next few minutes, I'm just going to share with you a couple highlights of what's happened here in August, and also a couple thoughts of mine that I'm thinking of for the future. And these are a couple thoughts I'm sharing with my clients too as well. So I thought, hey, it'd be a good opportunity to share that with you too as well. Maybe it can help you with your retirement planning and your financial planning. So in August so far, a little bit has happened. Number one is the Federal Reserve decided to cut interest rates by 0.25%. When that happens, there's two things. The short term is this, and by short term, I'm talking about now for maybe 2 years. You know, for a lot of investors, they're thinking, all right, let the good times roll, because since they're cutting interest rates, the Federal Reserve is trying to keep this momentum, this positive momentum for the economy pushing further. So people think they can make some more monies from the markets or try to grow their portfolios here in the short term, which, hey, isn't a bad thing, but that is something that's out there. Long term, something that I've been thinking about, I'm sharing with clients is, you know what, throughout history, again, history repeats itself, is when the Federal Reserve cuts rates, there's a recession looming. You know, I've been sharing that with clients, and not to be a negative Nancy or anything like that. I do think we're gonna have some positive momentum here in the markets for the time being, but we have to be looking forward, especially for my clients who are retired, about, hey, there's a recession coming. So how do we plan for that recession to come forward? And so that's one thing with the Federal Reserve cutting rates. In response to the Federal Reserve cutting rates, President Trump put an additional 10% on Chinese tariffs. And when that happened, the rest of the world took a magnifying glass and really tried to see what was happening here. And so that sparked some global recession fears, some global fears in general. A lot of news was coming out, and quite frankly, a lot of this news is not new news. It's been out there, but negative rates around the world. Oh my gosh, if you go to Germany, if you go to Italy, if you go over, France, they're giving you negative rates if you put monies into a bank account. You're not gonna make any money, you're gonna lose money. My friends, that's been happening for years already. That's nothing new. Same thing too as well with America. Oh, growth fears, or because the Feds are going to cut rates, there's going to be a recession, or what's going to happen. You know, that hasn't changed either. We've still been talking about that, and so people. That's what it tells me, is people are trying to find news things to talk about, and these aren't new things. You know, these are things that have been happening for quite some time. That tells me the media, people are just trying to put some type of market news out there to spark some type of reaction. But nonetheless, for my clients, I've been telling them, hey, we need to plan ahead, regardless of recession or not. And so here's a couple of things I've been sharing with them. If you followed me in the past, then you know about this. If you're new, let me explain to you. I use relative strength investing for my clients. So I look at pinpoint the best in class investments based off of the Dorsey Wright platform to see, hey, what sectors are performing the best, and then on top of that, what investments within those top sectors are performing the best. And so from the metrics that I use, from the software that I use, there's really 4 sectors that are doing well right now when it comes to my metrics. Number 1 is technology. Technology is not going anywhere. The second is healthcare. The third is industrials, which is aerospace. And the fourth is utilities. Those are done very well here moving forward. Those have done very well in 2019, and also too, looks like they're going to be doing very well moving forward. Here's one thing I've been sharing with clients and also to prospective clients. Let me repeat those with you. Technology, healthcare, utilities, industrials. Those are areas that are called defensive investments, meaning that these investments typically, of course, we can't guarantee anything, but typically do well when there's a recession. My software platform is already sort of moving our monies over to defensive investments. Utilities, whether markets are good or bad, we need to keep the lights on. We need to keep the gas on to cook, to read, to function daily in our homes. We need that. Healthcare, whether markets are good or bad, We're going to need the drugs. We're going to need the hospitals. People are still going to need that services. Technology is starting to become a little bit more of a defensive investment. Think about it. Software, cybersecurity. For myself, I know that I'm going to have to keep up to date with my cybersecurity for my softwares. I'm going to have to keep up to date with my softwares to make sure I have the most updated software programs running to make sure that my company continues to run smoothly. Well, the same thing is going to have to happen with these big time companies. And I'm sure the same thing for you. You're going to make sure that your information is protected via cybersecurity and everything in between. So technology is slowly becoming a little bit of a defensive investment. And then industrials, same thing. Right now, America, our government's giving a boatload of contracts to these industrial aerospace companies, and they're busy beyond belief. And so think about it. Whether markets are good or bad, these guys are still going to be making the planes, the defense contracts, the defense items, whatever the government needs, they're going to be building these things. And so for me personally, we're already thinking and transitioning some monies over to defensive investments for clients ahead of time, whether markets are good or bad. And so those are a couple thoughts for myself when it comes to the markets, when it comes to investments that I'm sharing with clients, that I'm sharing with folks. With any questions or any thoughts, please let me know. Moving forward, we'll continue to see what happens. I'm interested to see now that we're slowly going to enter the fall season. We're going to slowly start approaching, I'll talk about this in the next video for September, is that phrase sell in May and go away. Well, it begins again in the beginning of October, where we should buy investments in October, hold them till the end of April, and sell them in May. I'm getting ahead of myself, but I'll share that with you next time. If you have any questions, any thoughts, please let me know. I look forward to talking with you soon. Thanks so much. Have a great one. Take care.